For decades, trade between Canada and the United States was a model of perfect intimacy. From auto parts to aluminum, from forest products to dairy, almost everything flowed across the border every day, and the bond between the two countries was considered unshakable. Now, President Donald Trump's harsh and unpredictable tariffs are causing deep unease in Canada. On the one hand, he threatens to impose heavy burdens on sectors such as oil, steel, aluminum, and agriculture. And on the other hand, he has already tried to do so several times.
As President Trump stated yesterday, he is still committed to placing tariffs on Canada starting as early as tomorrow, possibly.
Nevertheless, Canada is pushing back, saying, "We will not surrender." This country, which exports up to 4 million barrels of crude oil per day to the United States and is America's largest supplier, is currently looking for other options. At this point, the question, will Canada prefer China or the European Union over the United States, does not seem fanciful at all. Especially with the launch of pipeline projects such as Trans Mountain, the news that tankers departing from the port of Vancouver are heading to markets such as China and Japan has raised alarms in Washington. There is much talk that if Trump's trade threats continue, Canada will quickly move to what he calls the third option. But what will this change? Canada's oil exports, which are heavily dependent on the United States, are now literally at a strategic crossroads. The country, which has long sent 90% of its daily oil flow to the United States and supplied its refineries, has gained access to the Pacific coast with the expansion of the Trans Mountain pipeline. Crude oil transported through the pipeline can now be shipped by tankers across the ocean to China and other Asian refineries. In fact, a few years ago, such a scenario would not have been taken too seriously because it was not easy to find an alternative to America's market advantage and logistical convenience. Now, data from the China Institute shows that half of all oil exports through Vancouver go directly to China. This is a picture that asks the United States, are you willing to lose me? Moreover, Canadian crude oil could become more expensive under Trump's tariff rhetoric and much more attractive to Chinese refiners than to American refiners. That is why Ottawa is warning, if you impose unilateral pressure, we will make new oil deals with China.
There are growing fears of a major global trade war tonight after President Trump announced sweeping tariffs on imports from Canada, Mexico and China starting tomorrow.
In the United States, many analysts say that Trump's tariffs are not without problems for the United States either. Protectionism may mean protecting industry on paper, but in practice it disrupts supply chains and leaves consumers with more expensive products. Moreover, higher costs for Canadian oil or metals could weaken United States refineries in the global competition. A huge consumer market like China would be happy to buy oil from Canada, refine it in its own refineries, and put it on the world market. This is how the logic of trade works. If one side unnecessarily closes doors or inflates costs, the other side looks for new options. Canada's Trans Mountain pipeline is a case in point. And this is just the beginning of what could be a bigger strategic move for Canada. Canada's rapprochement with China could open the door to bigger oil deals. It echoes what used to be called the third option, an approach to break away from American hegemony and deepen cooperation with other trading partners. There was a similar debate within Canada 50 years ago. At the time, the so-called third option policy aimed to break Canada's overdependence on the United States. Now, under pressure from Trump, this debate is reigniting. What are we going to do? We are too dependent on the United States. We get a headache at the slightest trade tension, say some voices within the country. This time, it is not only China that is an option, the European Union is also on the table. The Comprehensive Economic and Trade Agreement, also known as CETA, has already brought tariffs between Canada and the European Union close to zero. Yes, the geographical distance is a big handicap, but Canada's position is clear. At least we can overcome the difficulties and develop ways to send oil to the European Union or Asia so that our hands are not tied. This gives Canada leverage at the trade table. Think about it. The United States imports about half of its crude oil from Canada, and most of it is heavy crude. If Trump wants to bring Canada to its knees with tariffs, Canada can say, there are other buyers for my oil. Among those buyers, China seems to be the most prominent. Sometimes we even read news that Canadian oil will create new opportunities for China. What this means is that if United States refineries have to buy Canadian crude oil at a higher price, they will lose their competitiveness. Chinese refineries can get more advantageous prices and increase their share in the world oil market. Canada, in turn, could move away from the unstable tariffs imposed by the United States and hold on to a giant market like China. This possibility leads many experts in Washington to say that Trump's policy could backfire. The fact that the two sides are at such a sharp crossroads is fueling the anger of politicians in Ottawa who insist that Canada is not a submissive nation. Trump's threats are perceived not only as an economic problem, but also as an attack on 40 years of neighborly ties. Some members of the public are protesting, even booing the United States national anthem at some sporting events. In this atmosphere, Canada feels obliged to take serious steps. Not only Trans Mountain, but perhaps Energy East or Northern Gateway as well. Even though there are obstacles such as resistance from environmental groups, objections from indigenous communities, and state-federal conflicts, the possibility of building new pipelines is being raised with the argument that Trump forced us to do it. Maybe it will not be a complete revolution, but there is a serious discussion in Canada about the idea that we need more coastal access to Asia with more tankers. Of course, these plans are all on the table, but it is clear that they will not be easily realized. Global oil markets remain volatile, the economy is slowing, environmental backlash is strong, logistical costs are high, but for Canada, the price of being stuck with the United States could also be high. While the close ties between the two countries cannot be broken so easily, their increasing efforts to open up are weakening America's bargaining chips. This is precisely where the question, what will Trump do, comes to the fore. Although the United States president has temporarily suspended the tariffs, he is eager to bring them back to the agenda at any time, saying, "I will find new justifications." This uncertainty leads Canada to Plan B in order not to be caught unprepared. It seems that the Canada-China oil deal could infuriate Donald Trump's scenario is not far-fetched. As a result of all this, the question, will Canada and the United States' greatest economic bond ever be shaken, is being asked. The explosions in projects such as Trans Mountain and the tankers heading from Vancouver to China point to this. But the United States still has the geographical and logistical advantage and may remain the most profitable market for much of Canada. Perhaps this is just a show-the-stick tactic. Canada wants to force Trump to back down by saying, the European Union and China alternatives are on the table. In the United States, consumers may pressure the government to not raise the price of gasoline or produce because of the tariffs. Who knows, maybe both sides will make some concessions and find a win-win formula. Such a trade showdown could affect not only Canada or the United States, but also global oil markets and even European and Asian refineries. Once again, the world is being rocked by the great powers trade dispute. Maybe at the end of 30 days, Trump will say, "I am implementing tariffs," and Canada will say, "Then I am signing a big oil deal with China." When that day comes, the flames of the trade war will probably burn the economies of both countries. However, some analysts believe that they will agree before the hotspot comes. Nevertheless, this uncertainty increases the anxiety in the markets. What do you think? Can Canada export significant amounts of oil to China or the European Union as an alternative to the United States? Or will geographical and political realities prevent it? Will Trump's tariffs really create a painless outcome for the United States, or is losing Canada a much bigger cost? It is an open agenda, and the world is waiting with bated breath. Please share your views with us, and do not forget to subscribe and turn on notifications. How this strange energy chess game is resolved will determine the future of not only the two countries, but also the global trade balance. Goodbye.